Hey, everybody, I'd like to welcome you to another House of Bricks live. And you know we're live because we were struggling with audio right up until the last second. So I missed my man, Paul. He's in Minnesota. I'm in Detroit. So I'm fumbling between muted tabs and microphones that don't work. And the Wi-Fi was out. So, but hey, here's the beauty of being live is you get to see the real behind what it takes to do this every day. And I love doing it. It's been an amazing journey over the last 12 months. And I've been talking a lot about strategy for 2025. And I'm gonna own it right now. I am one of the worst people at strategy. I'm great at vision. I know where I want to go, but actually figuring out the building blocks or bricks that it's going to take there, I like to shuffle them every time we set them up. So it's good to surround yourself as a visionary with great people that have complementary skill sets as you, and they're not afraid to push back and say, hey, man, you just told me this yesterday. Now we're changing how we're going to get there. So listen, we're going to jump right into today's live event. Jason and I connected a couple weeks ago. He's the managing partner of Fruition Capital. And I think he's going to share, I know he's going to share some valuable insights with us on building profitable businesses from retiring owners. He's got a great story and strategy. So Jason, welcome to the House of Bricks Live.
Thanks, Adam. It's great to be here with you.
Well, thanks for joining. And listen, the algorithms love to reward us for going live. So that's why we do some of this. But love to hear a little bit about you, your story. We're not just interested in profile type accomplishments, but really getting to know the person, what they carry, and then also how it relates to business.
Sure. So I've had something of an interesting journey. My own personal risk tolerance is I like to get all the way to second base before I take my foot off first. But I've also had some, ambitions to get out of the sort of W-2 rat race, so to say. And so I've had to work for the last decade on how to do that the right way. And so, I came up just trained to be a good employee in school and in my family. Entrepreneurship was never something really that was talked about. And so coming out of college, jumped right into a W-2 job and worked it for years, went back to business school, and again, was just kind of doing the W-2 thing, but never really fully satisfied with it, and always kind of wanting to be in control of my own destiny and doing the entrepreneur thing. And so what I started doing, I identified an opportunity in commercial real estate after investing a little bit passively where I could become a general partner and sort of have a side hustle in this investment world. And I did that for years where I was working as a management consultant, and then I moved over and I was working in a corporate strategy role. But an increasingly large percentage of my brain share and time was moving over into this world of private investments. And I'm sure there was an opportunity cost to sticking around in W-2 rather than just, burn the ships and go do the thing full time. But I kind of was addicted to that stability. And I really hung on for a long time. And then about 3 years ago, as I sort of spread out my own chips into different asset classes, I came into operating businesses as an asset class. And, beyond that, I learned about this world that we call ETA, or entrepreneurship through acquisition, which is really this practice of going out and finding established, stable businesses to buy from their retiring owners. And something clicked. And I just knew that that was going to be the perfect place for me to be. It was going to take my sort of business acumen that I built over the years in corporate life and W-2 life, along with, what I've stood up as a side hustle in the private investment space. And now we run private funds that invest in entrepreneurs who are buying these established, stable businesses. So it's been a serious journey. There was probably 8 years there where I was working a W-2 and had my investment things going in side hustle mode. But now we're at, we've finally arrived, so to speak, at the place where I want to be, which is having something that we've built of our own, where we can just focus all our time on supporting entrepreneurs.
Well, you sound like a lot smarter man than me. So I am for sure burn the boats kind of guy. And there's definitely days when I think about, wow, what would it be like to have a W-2? And I had some of those seasons. I was executive vice president at Rocket Mortgage, and it was wild for me to get a paycheck every 2 weeks, like a amount. Of course, there were bonuses and stock available, but it was definitely a different mindset. I think there's pros and cons to both, and I think how you handled it, kind of easing your way in with some of that comfort. I think a lot of entrepreneurs would like to have that runway, but a lot of businesses start out of necessity, right? They either want to disrupt an industry, they need money, they don't like their job, they lose their job. It sounds like you managed it very well. And you talked about kind of the freedom of now entrepreneurship. Is it everything you thought it would be?
Well, I love what I'm doing. I got to choose, my industry and function, and I got to build something that had a good degree of flexibility in it. I'm a new dad. I got a 3-year-old and a 1-year-old. So, that flexibility matters to me a lot. Certainly there's times where, I'm waking up at 5 a.m. to get 2 hours of work done before the kids wake up, because that's what the business needs. And, I think the old saying is entrepreneurs work 80 hours a week so they don't have to work 40 hours a week. There's
Right.
certainly an element of that, but maybe I'm still in the honeymoon phase, but I'm just really glad to be able to focus all my energy on this instead of having to have one leg in each world, as I've done for so long.
Well, welcome to the club. So you are in the honeymoon phase. You look way too happy. So
I've already lost all my hair. I don't know what else there is.
You got the beard going, whatever works. So but listen, I love entrepreneurship. I love the grind. I love the struggle. And I love being able to, like you said, kind of control your own destiny, so to speak. So tell me more about the business and what you're doing.
Yeah, so I'll back up and I'll talk about the space that we're in first before I sort of talk about our particular business. So for those who are unfamiliar, ETA, or entrepreneurship through acquisition, there's a huge percentage of the businesses in our country that are owned by baby boomers. It's over half. And the Exit Planning Institute dropped a study not so long ago that said 73% of business owners plan to exit in the next decade. And most of these folks, they don't have family that wants to take over their business. Age and health are forcing them into retirement. These businesses have to go somewhere. And so there's a serious kind of like once in a generation transfer of ownership going on. And some of these businesses will just, wither away and die. But a lot of them are stable, profitable, ongoing businesses. They've got good products. They've got long-standing customers, and somebody can come in there and buy that business at a really attractive valuation. And as an entrepreneur, it's a completely different risk reward profile compared to starting something yourself, right? You build from the ground up. And I think, there's a stat that like something 90% of startups fail within 5 years. Well, it's a totally different thing if you're buying something that's up and running and stable. And so that's the space that we operate in. To be fully transparent, which I know, you're all about being real with your audience. I'll be real. I thought for a good while that I might go and buy one of these businesses for myself and, become an owner operator. The proposition and the economics are just super appealing. But after I had done about a quarter of like prepping as if I was going to do this for myself, I took a step back and looked in the mirror and said, hey, all right, I've got a young kid now and the other is going to be on the way. Is the lifestyle of the guy searching for the business and then being an operator, because I know myself, I would be a 100-mile-an-hour operator. Is that the right thing for my growing family right now? And the answer was no. And so I backed up off that route for me personally, but I could not get this space and the opportunity out of my head. And so in sort of looking at it, the answer became clear, which is, all right, well, I've got the business chops, right, for my whole W-2 career. I've also been doing the private investment thing from commercial real estate. So we're going to pick those two things up and create Fruition, which comes in as an anchor investor, providing capital to these entrepreneurs who are going to go out there and buy these businesses. So I'm not in the day-to-day running these things. I'm a fund manager, a capital allocator, but I'm still very much, connected with these entrepreneurs. We take a board seat. So we get visibility in these businesses and we're providing, advice and guidance, but I still get to, punch out when I need to go have dinner with my kids when they get home. And it's not like I'm going to be stuck at the office, dealing with a fire drill in a business. So it's a nice blend of those things. And that's the space we're operating in now.
Well, I don't get jealous of many guests on my live events, but I think what you have set up is pretty darn good right now. And you're thinking about it the right way. You get to experience the entrepreneurial journey, but not necessarily taking on all of everything that comes with it. And so reminds me, I used to be on a legacy institute in Dubai, and we worked with all these high net worth families. And when we're talking high net worth in Dubai, like we're just rounding errors over here in the US. And it was interesting to watch the dynamic in these families. You had a dad that had built a multi-billion-dollar empire, and either he didn't have the confidence in his son to take it over, or the son didn't want to take it over. Dad, you were never here. All you cared about was your business. So it was just interesting to watch that, and really eye-opening for me on it's not about the money, it's about the impact. And, legacy is something we can live. It's not a deathbed decision. And so it sounds like you're building, something valuable, really helping identify these. And those stats are absolutely staggering in terms of how many people are looking to exit their business. So do you have a specific industry that you work with? What is the ideal client profile of someone that can benefit from you?
Yeah, I'll talk through that, but I'll hit on legacy real quick because that is such a factor in this space, right? These folks who are buying the individual businesses, they're you and me. They're not big private equity shops with, a nameless, faceless email box in front of it. So a huge part of being successful as a search entrepreneur is communicating that, like, hey, you get that this owner, likely baby boomer, this has been their life's work. They may have started this thing 40 years ago. You're all about carrying on their legacy and making sure their employees have a future there with stable jobs and keeping the business in the community. So I think that, carrying on legacy is a huge part of this space, and we try to enable that. Your second question was around industry, like how do we focus? So actually, we're very intentionally diversified across industries and across geographies around the country. Our focus is around the business dynamic. And so the reason that people like acquisition entrepreneurship in the first place is a little bit what I mentioned. You have some stability. You've got customers and products and revenue. It's not this crazy startup risk and growth curve. And so what we've done is we've kind of like dialed that all the way to 100. So we look for the most stable businesses we can find. So for us, they're B2B companies. So all of that company's clients are businesses. They're not selling to consumers at all. And beyond that, we look for like repeat business. So I love a company that's been selling to the same 50 customers year after year after year after year. And we're usually talking about what we call old economy businesses. So these are not tech centric. They're not highly disruptible. They may be something that you saw on a show of, Dirty Jobs or something like that. But we're talking about some manufacturing business services like commercial cooking hood cleaning or heavy towing, or sheet metal fabrication or machine shops. It crosses a lot of different sectors, but they all have that same core dynamic where it's not project-based revenue, it's not cyclical, it's not tech-centric, it's just a solid business that's B2B that's been serving the same clients year after year after year.
So, and thank you for that. One question I do have, I think that follows on with it. Prior to House of Bricks, I was president of Sales Transformation Group, and they did sales training for roofing companies, both commercial and residential. There's been a lot of PE activity in roofing, roll-ups taking place. Are you doing anything in the trades? And you said B2B would, on the commercial side of roofing?
Yeah. So, overall in the acquisition entrepreneurship space, the trades and home services, whether it's plumbing, electrical, HVAC, roofing, they get a ton of attention. It's a space that we stay out of just because we really want that. If you do a roof for a residence, it's going to be 30 years before you go back and do that roof again. We want something
Right.
that's year after year after year. We will look at some trades in commercial, particularly like commercial HVAC, where a big part of their base is going to be like maintenance contracts, or electrical has the same thing going. If there's a heavy new install or new construction element of it, where it's really project-based revenue, then that's not so much for us.
Well, something to consider in roofing, the service business that is actually very, very profitable with high margins. Obviously on residential, again, it's going to be that gap, but in the commercial side, we were helping them build their services business. And just like in the auto industry, the maintenance and service, is wildly profitable. So tell me about the team. Is it just you? Have you built a team around you?
Yeah, I've definitely built a team around me. I strongly prefer to be the dumbest guy in the room whenever possible. And that's a good tip about the commercial roofing and the recurring. I'm going to dig into that after the show. But I have 4 other partners with me. 3 of them have been operators themselves. So 2 of them acquired and operated, grew their businesses, and successfully sold. And then one of them ran a search that failed, and then subsequently ran another search and acquired. And he actually still runs the business that he has today. And he's actually, much like yourself, he's a super transparent guy, and he's out there all the time talking about the trials and tribulations from the failed search and then the successful search, and now what it's like to be a business operator. So, I've got a great team around me that has a lot of experience in the particular asset class. So when we go to talk to entrepreneurs, because that's really, we haven't talked about how we work, we're very much an entrepreneur first shop. And so my team and I are out there all the time speaking with folks who have this ambition that they want to go out there and buy one of these businesses. And, last year we talked to like over 300 people that were thinking about or were actively down this path. And so I think it adds a ton of credibility for us, frankly, to be able to go out there and say, hey, look, a majority of our team has not just been investing in this space for a long time, it has business experience, but we've acquired, we've operated, we've grown, we've sold, we've done all the things that we're going to be able to advise you in what you're trying to do as well.
So I'll ask you 2 questions. You can pick which one you want to answer first. I'll just ask the first one. So this is the favorite question of every entrepreneur is, what's the valuation of my business? So I know there's a lot of different variables. Yours are more established businesses. So there's generally accepted principles for valuing it. But what is, when you find a target business or one that you're interested in, what's the valuation process and what methodologies do you use?
I think that was only one question, so thank you for that.
It was. I said I'll yeah, I hate when people ask me 2 questions on an interview. I'm like, which one do you want to answer first? So I caught myself not asking 2 questions. So
if you want multitasking, you need to talk to my wife. I'm a one-track guy. So valuations, that's one of the very attractive elements in this space, is that these businesses can be acquired for very attractive multiples. The way it works is fairly straightforward for these, ongoing established businesses. It's as a multiple of cash flow. And so when you're talking about truly small business, like sub $1 million in earnings, they use what's called SDE, or seller's discretionary earnings, which would essentially be EBITDA, but it adds back in like the owner's salary. It's a full picture of the compensation package that the owner has available to them. When you get into the segment that we really focus on, which is like that $1 to $3 million in EBITDA type business, then it is truly valued on EBITDA, which is, it's tangential to SDE, but it's slightly different. And then what you're going to have is a multiple that's multiplied against that EBITDA that arrives at your valuation. In this space that we're talking about, typical multiple is going to be between 3 to 5 times. And, what makes it a 3, what makes it a 5? There's a number of variables at play there. Growth rate and stability are probably the highest among them. If you have a business that, it's got a layer or 2 of management, the customer relationships, don't live with the seller. They live with some account managers. There's processes in place. And there's really this high degree of confidence that somebody new can come in there and just kind of grab the steering wheel and drive it without a huge messy transition. That's certainly going to push that multiple up closer to, the 5 times EBITDA type of range. Growth rate definitely plays into that too. Something that's been totally flat versus something that might be growing at a 5 or 10%, compound annual growth rate. You'll get a higher multiple for something that's been showing not episodic growth, but really like some steady growth as well.
One thing that you didn't mention is barrier to entry. So how important is that?
Yeah, I mean, that's kind of a table stakes for us, right? If it's a business that doesn't really have a competitive differentiation, doesn't have a barrier to entry, it's not really an attractive acquisition target. We focus on enduringly profitable businesses, right? They've been delivering the same kind of revenue and earnings for a long time. Candidly, if there weren't good barriers, they wouldn't have been able to deliver that over time, right? So that's almost something that's built in. If you have a highly competitive industry, you're going to see really, really thin margins, and those aren't going to be very attractive acquisition targets.
And I see a question in the chat here. How important or what characteristics do you look in? And again, are these really entrepreneurs? Yes, they own their own business, but they've been consistently delivering over time more of that CEO, owner, operator, less entrepreneurial spirit. But are there certain characteristics that you look for in the owner, and how important are those?
Yeah, so I'll make sure I'm using the right terms, because you've got somebody who's selling, right? The boomer, and I could care less really about them. It's the new incoming entrepreneur, owner, operator, whatever term you want to use, that we're really forming this partnership with, and it's a marriage. And absolutely, that person's skills and experience and integrity and competence, like, that's paramount. We're betting on the jockey every bit as much as we're betting on the horse. And like I mentioned earlier on, we're entrepreneur first. So I'm actually establishing a comfort level with that person before ever even there's a deal on the table. Most of the time, we're talking about first-time owner / CEO. So what I'm really looking to say is, hey, there's sort of a defined set of things that you need to be able to do well to lead a business of this size, right? You certainly need to know sales. You need to know operations, the financials, the strategy. Have you led and managed teams of people successfully before, right? Those are the things where we're looking to say, if you have experience and qualifications in each of those requisite skill sets, and through conversations with you and conversations with your network, we're getting the sense that you're a high integrity, competent actor. That's somebody that will say, hey, we're going to bet on you, even though you've never worn the CEO's hat before. You've done all the things that it takes. And so, we'll bet on that person. The one sort of nuance on top of that is some of the businesses that we'll look at are like manufacturing, a little more technical in nature. In those instances, we want to see somebody that really has that type of background. They've been an engineer, they've worked in a manufacturing environment. Outside of that, we're willing to give people a lot of latitude. We've got a commercial cooking hood cleaning business, and you don't need to have had a career in commercial cooking hood cleaning to understand that business model. You know what I mean? So it's much more about your skills and competence and character as an operator.
Well, what you just said, a couple things on that. I'm now 46 and kind of seeing friends in that range of 45 to 60 that may have built a business. They may be facing some financial troubles, maybe lost their job, whatever it is. There's a wide pool of talent out there of very qualified people that can lead companies like this in that 45 to 60 range. They really haven't taken the time to invest in their personal brand. They thought it would last forever where they were. How are you finding this type of talent? And if there are people out there listening that may be looking for something more entrepreneurial or, face some job loss, whatever it is, how are you finding these people, and how do people get connected with you if they think they could be a good candidate?
Yeah, well, there's really, we try to be visible in a whole number of different channels, right? So on certain MBA campuses, they have ETA concentrations. There's now conferences, 5 or 6 of these a year. Certainly there's podcasts and things, and shows like this that aren't even necessarily focused on ETA, where we create visibility about this. Search Funder is kind of like the main little micro site where these entrepreneurs hang out, but believe it or not, SMB Twitter is a real place too. And we also have good referral partners in the ecosystem. So some of the M&A attorneys that work on these transactions, quality of earnings providers, we'll go through them and they'll help connect us with folks that are in their ecosystem as well. For folks who want to get in touch with us directly, coming through our website, probably the best way to go. We've got a contact form on there. So that's fruitioncap.com, or they can reach me directly. I'm jason@fruitioncap.com. If it's somebody who's just become aware of this opportunity and it's, holy crap, I can go buy one of these things for myself, I would say, go get a book. Walker Deibel writes Buy Then Build. That's a great resource. Or there's an HBR guide to buying a small business. Those are great sort of introductory resources. And then go get on Search Funder and start talking to people, and you'll figure out the podcast to listen to, and you start to explore whether this is a path that would make sense for you.
All right. Well, I appreciate it. And it was great connecting with you a couple of weeks ago. I see Paul put your website and email in the chat. I'm sure people can find you on LinkedIn as well. Any closing thoughts for our listeners today?
No, I'm really grateful that you had me on. Hopefully we've opened folks' eyes to this as an opportunity. I think it's a tremendously lucrative path for folks who, want to be an entrepreneur, who may not want to start their own thing, folks who, maybe they've been climbing the corporate ladder and they're over it, or to your point, they've had job loss. The only other angle that we really didn't talk about is we are a 506c fund, and so we do accept capital from investors as well. So to the extent that folks in your network like this idea, but don't necessarily want to run one of these businesses themselves, we provide the ability for our investors to access this asset class through our firm and fund. So that's something that's an option out there as well.
Well, I appreciate that and you sharing and joining today, Jason. It's great being connected with you. We absolutely do have investors in the House of Bricks community. Again, just building growth-minded individual or focusing on, building a community of growth-minded individuals, entrepreneurs, venture capitalists, investment bankers, CEOs. We've got the gamut, just people that want to build and grow together. So thank you again for joining, and we will see everyone next week.
Thanks, Adam. It's great to be here.